You've probably heard that global debt is this huge problem we need to solve. But what if it isn't a problem at all? What if it's a system and it's working exactly as it was designed to? Today, we're going to meet the architects of that very system. So let's start with a number that's, well, it's pretty much impossible to wrap your head around. $315 trillion. That's the total amount of debt in the world. It's more than 3 times the size of the entire global economy. And it means pretty much every single government on Earth is in the red. And that brings up a really simple but kind of terrifying question, right? If every single country owes money, who exactly do they owe it to? Well, the answer isn't a who, it's a what. It's a system. See, this system didn't just pop up out of nowhere. It wasn't an accident. Nope, it was engineered, piece by piece, over the course of 300 years. And to really understand it, you have to meet the people who built it. So let's meet the architects. Okay, so here's how we're going to break this down. We'll start with the paradox itself, then we're going to meet our 4 key architects. Patterson, who came up with the idea of a permanent loan. Then Rothschild, who spun it into an unbreakable global web. After that, Morgan, who built an engine for infinite borrowing. And finally, Volcker, who basically sprang the global trap on everyone. So let's jump back in time. Our story starts way back in the 17th century with our first architect, William Patterson, and his truly radical idea, a loan that was never, ever meant to be paid back. Picture this. It's 1694, England is completely broke, and it's stuck in a war with France. The usual lenders, they won't go anywhere near the government. Then this Scottish merchant, William Patterson, shows up and tells the king he's got a solution, a brand new kind of bank that will lend the government £1.2 million. But here is the crazy part, the absolute genius of his plan. The government would never have to pay back the original loan, ever. Instead, they'd just pay 8% interest on it forever, and that interest would be funded by new taxes. Suddenly, the debt itself becomes this permanent thing, an asset that lenders could actually buy and sell. Patterson had just invented permanent national debt. So Patterson built the blueprint, right? But our next architect, Nathan Rothschild, he's the guy who took that blueprint and went global with it, weaving it into a web so complex that it could never be broken. All right, fast forward to the early 1800s. All of Europe is caught up in the Napoleonic Wars. And Nathan Rothschild, using his family's incredible banking network that spanned 5 major cities, doesn't just lend money to governments. No, he creates a modern, lightning-fast market for their debt, buying up their bonds and reselling them to investors all across the continent. And this is where it gets really clever. Before Rothschild, if a king didn't want to pay a loan, he'd just say, nope, not paying. And that was that. But after Rothschild, that just wasn't possible anymore. A single government bond might now be owned by a dozen different people and institutions. A French investor, a German bank, an Austrian pension fund. Defaulting now meant you were threatening to crash the entire financial system of Europe. Default became impossible. Okay, so now the debt is permanent and it's all interconnected. But there was still one problem, a ceiling on how much a government could borrow. Well, our third architect, J.P. Morgan, he didn't just raise that ceiling, he blew it clean off. So in 1907, there was this massive financial crash in the US, the Panic of 1907, and the whole economy nearly went down the drain. J.P. Morgan knew that private bailouts couldn't fix the problem forever. So in 1910, he got the country's most powerful bankers together for a top-secret meeting on a place called Jekyll Island. Their mission? To design a central bank that the American public, who, let's be real, hated the idea of a central bank, would actually agree to. And the results of that meeting was the Federal Reserve. And the machine they designed? It was a total game changer. Here's how it works. It's pretty simple. Step 1, the US government needs money, so it issues bonds. Step 2, the Federal Reserve literally creates new money out of nothing. Step 3, the Fed then uses that brand new money to buy the government's bonds. So what's the result? The government now has a guaranteed buyer with a bottomless wallet. All the old limits on borrowing, gone. The potential for government debt was now infinite. Okay, so the trap is almost set. The debt is permanent, interconnected, and infinite. But what happens when a country just can't pay? Our final architect, Paul Volcker, answered that question, and in doing so, he slammed the door shut, locking the entire world into the system for good. It's the early 1980s. Inflation is out of control in the US. So the Fed's chairman, Paul Volcker, does something drastic. He cranks interest rates up to a staggering 20%. This was absolutely devastating for developing countries who had borrowed billions at much lower rates. Suddenly, they couldn't even make their interest payments. In 1982, Mexico announced it was on the brink of default, which threatened to take down some of the biggest American banks with it. Now, Volcker had a choice. He could have let those big banks fail, but he didn't. Instead, he changed the entire game. See, in the old system, if a country couldn't pay, it defaulted. The debt was wiped clean, and yeah, the lenders took a big loss. But Volcker, working through the IMF, replaced default with restructuring. Now the lenders get bailed out, and the country in debt, they get new loans. But, and here's the catch, those loans are just to pay the interest on the old loans. In return, they have to accept harsh austerity measures and basically hand over control of their economy. The debt never goes away. It just becomes permanent, managed servitude. So let's put all the pieces together. Let's look at how these 4 layers, built by our architects over 300 years, click together to create the financial world we live in right now. First, you've got Patterson's foundation. Debt is designed to be permanent. Then Rothschild weaves his web, making that debt too interconnected to ever fail. Next, Morgan builds the engine, a central bank that can create infinite money to buy the debt. And finally, Volcker snaps the lock shut. Even if you can't pay, you're not allowed to escape. You just get refinanced deeper into servitude. So what does this all mean for you and me today? Well, it boils down to a massive continuous transfer of wealth. Think about it. Taxpayers, that's regular people and businesses. We all pay taxes to the government. The government then takes a huge slice of that money and uses it for debt service, which is just a fancy way of saying they're paying interest. And where does all that interest money go? Straight into the pockets of the bondholders, the big banks, the giant asset managers, the pension funds that own all the debt. But here's the final piece of the puzzle, and honestly, this is the part that blows your mind. We can never pay the debt back. Why? Because in our system, money is debt. When a government issues a bond, the central bank literally creates new money just to buy it. So if we somehow paid off all the debt, the money supply itself would collapse, triggering a depression that would make the 1930s look like a party. The debt isn't a bug in the system. It is the system. So when you see that giant number, that $315 trillion, the key takeaway is this. It's not a sign that something is broken. It's not a crisis we need to solve. For the people who designed this system and for those who run it today, it's the sign of a system that is, after 300 years, working perfectly, exactly as they designed it.